Hello, this is Dr. Dennis Anderson. I'm a retired professor, and I've written a book on E-minis, and the title is Trading E-mini Stock Index Futures, A New Path to Wealth, the 3 Anderson Models for Success in All Markets and Market Corrections. This is the second video. In the first one, I explained in general detail about E-minis and why and how you trade them. In this video, I want to be more specific on how I set up the trading platform and the indicators I use. Don't be fearful of what you see on your screen. If you're new at this, you don't have to know everything that's on the screen. You just have to know enough to trade these E-minis. As I mentioned in the first video, all basic material you need to succeed is in this book. There are no added costs. I want everyone to be independent and successful traders. It's part of the generativity I'm trying to engage in the later part of my life from all the years of experience and learning that I've had. You can do this yourself. I'm not asking you to trade all of your assets. Depending on the size of your portfolio, 20% of a $200,000 portfolio would give you the chance to make an extremely good return. If, for example, you're making 7% on a $200,000 portfolio, that's $14,000. If you take 10% of this and set it up as a trading account, 20% of this and set it up as a trading account, you can double or triple your annual return. As I speak through this, I want to emphasize that there is risk attached to this. You trade with margin, which can be very successful, but also you can lose a lot of money. Most day traders don't succeed. That's because they don't have a clear plan. They're impulsive or emotional. They look at it as gambling. They go by instincts, and you can't do that. I've been very successful with this by staying disciplined and serious about what I'm doing and limiting the amount I trade and using stop losses to protect myself on the other side. The platform that you see in front of you, I'm going to look through that now, sorry. On the right side is the buy and sell column. You can see the cursor showing buy one, stop, it says. That's for if it rises again. Again, I've got all these details in the book. I don't expect you to watch this and know how to trade. I'm just showing you how it works. Now it says buy one limit, so if the market falls to that point, you will buy one. On the other side are the sells. And when traders are trading during the working hours, this is on a weekend, so there's no activity going on, you can see them moving their buy and sells up and down these columns. And that gives you some indication, obviously, of where their attitude is, and allows you to put in a limit order if you want to try to get the best price. In the center is the single chart. I suggest you have one instead of two. The blue lines there at the bottom are volume. They're less significant. And the chart at the bottom that I'm on now, the rectangular chart, is to indicate whether markets are oversold or undersold. I write about this more in the book. The top line is 80 overbought, and the bottom line is 20 oversold. At the top is the heart of the matter. I want to go back to, this is the election on November 8th. People were warning about Donald Trump. And it was going to be a catastrophe if he was elected. As you can see, for about 3 or 4 weeks before the election, well, this is March 12th, all the way to November. See how flat the market is. It's trading in a very limited range. Traders are reluctant to bid up the market, but they were reluctant to sell because they had some faith that the economy would be okay. Then he was elected. See the spike down here? That was computerized panic selling, but it came back up, and then it took off. And between the election and early part of 2017, the market was up 15 to 20%. I want to point out this is a 200-day simple moving average, the gray line. The green line is a 50-day simple moving average. The orange line for me is a 20-day simple moving average. You can make your own colors on this. The important one to look at is the blue line, which is I created these two things in combination. The blue line is the 9-period indicator, and the other one there is the exponential indicator, and the pink one is the 3-period exponential indicator. And as I write in the book, when the candlesticks, and if you're not familiar with them, I don't have time to explain it all in a short video, but when the candlesticks are staying above the 9x, which is the 9 exponential, the market will usually stay in its present direction. As you can see, this continues to go up significantly. If you had bought after it broke through over here on November 9th or so and stayed with it, you would have made a significant profit. Then we got into a trading pattern. Now these candlesticks look small, but this is the Dow. And if I open this up a little bit, they'll get larger. It all depends on the scale you see to the right. But they keep moving up, as you see, and then they get into a part here where they might get flat again. And again, the E-minis trade with margin, and I refer you back to the first video to learn more about that and to read the book. But here we're moving again in a flat. You can use the second model, grabbing index bites, to take regular profits out of this, because it's not a trending market here in March and April. It flattens out. So you might want to take some profits. I think the Dow was up close to new high here, close to 21,000. Here it inched up a little bit more. Have to shrink this now back to where it should be. And you see it's still riding on the 9X or slightly above it, and is still in a positive mode. And it goes on here, and you can see now we're into September, and it's pretty flat. You don't need, as I said, to know everything about this platform. You just need to understand generally how this works. And there's an idea here. When Brexit happened, when Britain voted to leave the European Union, I used these models and jumped in, and I explained that in the book. And to make a long story short, I made $25,000 in 6 days. This is something you can do. I need to wrap this up now. I've got an email address I've set up for people who buy and read the book. It's called Anderson E-mini, ANDERSONEMINI @gmail.com. I'm going to set that up for the buyers of the book who've read it and thought about it. I won't respond to general questions about what it is. I don't have time for that. But I'm going to send out some responses maybe twice a month here in the near future for questions or comments that I get from people. And thank you for listening to this, and I wish you all the success.